All right, so the latest Case-Shiller home price data is out, and the gap between the hottest and weakest markets is getting more and more noticeable. According to the latest S&P Case-Shiller Home Price Index, one of those indexes I really like to follow, national home prices are up 6% year over year, and the 20-city index is also around 6% positive. Now, what does the Case-Shiller Home Price Index look at? So 20-city index, what do we mean? So this index tracks the same 20 major cities every single time. It doesn't change. It doesn't give you a top 20. It just tracks the same 20 over and over, and it's been doing it for quite a long time. So this is not, don't think of this as a best 20 or worst 20 cities in the country. It's just a fixed group of large metro areas, and they're all being compared to each other over and over and over again. Now, here's how it measures it. This is important, and this is why I kind of like it. The Case-Shiller Index uses something called a repeat sales method, which means it tracks the same exact home every time it sells. So it's literally looking at the same homes and what's their sales history. And then it just compares the price change, and then it aggregates that change across thousands and thousands of homes. So if a house sold, say, several years ago for $200,000, and then it sells today for $500,000, that price change gets counted. It's just looking at what has actually sold. And then they do that over thousands of homes, and they average it out. So it doesn't look at new constructions, doesn't look at renovations, doesn't care about the size of the house, this type of house, that type of house, this neighborhood, that neighborhood. It doesn't care. It's a weighted formula. It just smooths it out over time. Now, remember too, it reports a 3-month moving average, so it will lag a little bit. There's about a 2 to 3 month lag in the data. But look, in simple terms, it's measuring true home price appreciation over time. Actually, what a house is being sold for over time, aggregates the data, and it doesn't care about what it's listing for. It's what it actually sold for. So when you break it down city by city, it gets pretty interesting. And boy, you can really see we've got just totally different markets all over the place in the U.S. All right, let's go over the full city breakdown. So I'm going to give you all 20 cities, and I'm going to go from strongest to weakest, and I'm going to give you the percentage increase for each city. Well, or decrease. Well, let's see. Well, let's look at it. All right, New York, number 1, up 7.6%. So New York saw, high income demand, limited supply. It's still pretty tight inventory wise in a lot of New York, especially in popular neighborhoods. All right, number 2, Chicago. Chicago up 7.4%. Real quick, if I haven't mentioned it, this is year over year data. So we're going back 1 year ago till now. This is the percentage increase from a year ago to this data was aggregated around the end of February. So February 2025 through February 2026, what was the percent change in home value in these areas? So starting again, New York, 7.6%, Chicago, 7.4%. Chicago, generally still affordable. A lot of local demand is still there, and they're not building much there. Third, Cleveland, up 7.2%. Very affordable market, Cleveland. There are these small price increases, but Cleveland, Ohio, up 7.2%. Detroit, number 4, up 6.9%. Again, improving economy in Detroit, good demand there. Boston, up 6.8%. High income workforce, you got tighter supply, pressures on prices there. All right, we got Charlotte, up 6.5%. You got population growth. You got job migration in Charlotte. Charlotte's a city I've talked about before. It's doing quite well. Population growth, job migration. They're building out businesses there. Steady housing demand going on in Charlotte. Atlanta, Georgia, up 6.3%. Atlanta, good job market. Lots of migration going on there. Tampa, up 6.2%. Again, more migration. You got tax advantages there with Florida. But momentum cooling. Tampa, if you would have looked at this data a year ago, was up much more than that. So that's actually a sign that Tampa's cooling down. And same with the next one on this list, Miami. Miami being held up by international buyers, wealth migration. I've talked about the luxury market there and how strong it is, and the ultra luxury market as well. But middle class getting squeezed there. Los Angeles up 5.9%. Again, still supply limited in Los Angeles, but prices are up, according to this, 5.9% from a year ago. All right. Moving on, Washington, D.C. up 4.3%. Again, but this is a slowdown in Washington, D.C. Those numbers were much higher before. San Diego up 4%. Minneapolis on the list too at 3.8%. Right? Balanced market. Some of these, Minneapolis didn't really have any type of major boom or bust. It's just been steady demand over time. That 3.8% has been steady there. Dallas up 3%. Got a lot of new construction there. More inventory. And Dallas was doing much better before. Las Vegas, same thing, up 2.7%. Cooling off for sure. Phoenix up 2.2%. Cooling off. Again, bigger slowdown in Phoenix. Those numbers were much bigger. Phoenix was showing price appreciation of 10, 15, 20, 30, 40, 50% even if you go back. And now we're just at 2.2% year over year. Denver, 1.8% increase. Seattle, 1.2% increase. San Francisco, only 0.5% increase. And Portland, only 0.2% increase. Now, those, remember, it's not a top 20 list in the country. It's just these are the 20 that the index tracks. Okay. Now, we're seeing the Midwest and Northeast strong. That's something we've talked about. More affordable, active buyers, not much building, not much overbuilding, supply staying tight in the Midwest and in the Northeast. Florida, Miami, Tampa, international demand keeping that going, ultra luxury market keeping that going, but what a slowdown in those areas compared to before. Weak markets, where is it weaker? Well, the West Coast, definitely weaker. But here's where I gained some real insight. The spread, you're talking about the top city up 7.5% to the bottom city up only 0.5%. So there's a huge gap, even though this is one national housing market, a huge gap from one major metro to another. Another thing very interesting, not a single one of the metros was negative year over year. Even the weakest market was still technically positive. If you notice, I didn't say any negative percentage. Now, the weakest markets are barely growing, but it's still positive. So that's interesting. You're not seeing anything negative, but again, it's only these 20 cities. If this index decided to actually rank things and track just, hey, here are the top 20, yeah, we'd see some negatives. We've talked about that. Austin, Texas, we've talked about in Cotality's report, is down 5.5%. Cape Coral, Fort Myers is down 6.5%. So you would have shown those cities, but you don't see these cities in this Case-Shiller Index. You look at the Case-Shiller Index, you don't understand what they're doing. Well, you'd think everything's just fine and dandy. Every city's up, but again, it only looks at the same 20. Okay, same 20 cities. All right, but Austin, Cape Coral, Fort Myers, they're not included. They're just not on the list. All right, so what I take from it is a loss of momentum in some of the cities like Miami and Tampa and Phoenix and Vegas and all that. You see, there's definitely a slower movement as far as those cities are concerned. The affordable markets are still going up there. The Clevelands, the Detroits, and so forth. They're still going up, so that looks good. And they're steadily rising. I look at this list, and my thought is, wow, what a market we have. It's just completely different from city to city. You got to know your local markets more than ever right now. It's not one national housing market. You can see from this list, it's really just 20 different markets, and you got to understand each one. They're all unique, and they're all sort of going through their own stories. At the end of the day, you got to understand they're all unique. Really interesting stuff. Good list. I'd suggest you take a look at it, follow it. If you're interested in those 20 cities, I like the way they gather data on this Case-Shiller Index, and I think it's a good understanding of what's going on. Before we end today's show, stop what you're doing and subscribe right now to Real Estate Market Minute Plus. Listen to all episodes ad-free. Get exclusive bonus episodes and content and help support the show's growth, longevity, and future improvements. Go to realestatemarketminute.supercast.com right now. You can also find the link in this episode's show description. Check it out. I know you'll love it. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at The Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time.